So the next config is technical clearing account. So this is the new thing which is introduced in new asset accounting. Let's understand what is this. Oops. Okay, here we are. What is technical clearing account? For an integrated asset acquisition posting, the system divides the business transaction into operational part and valuating part. For the operational part, the vendor invoice. So there are two system. When you purchase an asset, traditional entry was, asset account debit, whatever asset number is, and credit the vendor, right? That was a very simple entry. And in that same entry, it was a valuation part. Asset debit was valuation and credit was operational. But now with the introduction of technical clearing account, SAP has broken up the operational and valuation part separately. For operational part, the system posts a document valid for all accounting principles against the technical clearing account for integrated assets acquisition. So what operational part is the vendor invoice. System posts a document valid for all accounting principles against the technical clearing account for integrated asset acquisition. So it posts one document. It says debit technical clearing account, credit vendor with whatever value it is, and it posts one document number in all the ledger groups, in all the ledgers, leading, non-leading, whatever the case is. From technical perspective, the system generates a ledger grouped independent document. So it's that document number which get generated for operational part is ledger independent. It is just one document. Okay. But now when it comes to valuation part, what happens? For valuating part, asset posting with capitalization of asset, the system generates a separate document that is valid only for the given accounting principle. Okay. So the valuating entry would be asset debit to technical clearing account. And here the system posts an entry which is basically by ledger groups. So let me give you an example. This is an interesting topic. So we purchase assets for $4,000. Okay. Now we will say traditional posting. Traditional posting is debit, credit, asset number, vendor number. Okay. And then we say $4,000, and then we say $4,000. So this was a traditional posting. Now what happened in the new one? In new posting, we have a debit, we have a credit. It posts tech clearing account and vendor, and it says $4,000, $4,000, and this is applicable in leading ledger plus non-leading ledger. Okay. Another posting system makes is debit, credit. So the second document posts this one. So this is operational part, and this is valuation. Now this one is posted into 0L. Another same entry will get posted into non-leading ledger. Now okay, so this is one part. We'll come back to Excel again. So let me explain you again. This was a traditional posting where you have debit asset and credit vendor, but now with the introduction of technical clearing account, the posting is split. It says operational part, this one, and vendor can be paid off, and then valuation part, it posts a ledger specific document, asset number to technical clearing account, asset number to technical clearing account, leading ledger and non-leading ledger. Now the question is, why? What is the benefit of we are getting out of this? Now two documents. That I'll explain you. Give me a minute. In this way, coming back to the help. In this way, system ensures that technical clearing account for integrated posting has a balance of 0 for each ledger group. So if you see here, my technical clearing account is debit for all ledger groups and credit for all ledger groups. It's 0 actually by ledger group. Okay, so no problem. We are good here. So system ensures 0 balance. That's okay. The account does not appear in the balance sheet, but in the balance sheet itself, but in the notes to financial account statement, since it has 0 balance, it will never appear in your balance sheet because it's a 0 balance. Now, why to require this account? If you see here, there is another thing which comes into picture is the thresholds. Okay, country threshold. So this asset purchased in US or any other country, for US GAAP, this is for leading GAAP. Let's say my picture is US GAAP is 0L and local GAAP is NL. This is US and this is Germany. Now for US GAAP, asset is capital, but for German GAAP it's an expense. For US GAAP it's an expense. So what will happen? So here it will go to the expense account. You got it? Now it makes sense to have different valuation. So for US GAAP, the valuation happens in expense because it's a less than $5,000. But for German GAAP, it's an asset because there the threshold is not $5,000. So that's why system will post in leading GAAP, it will post to expense, but in non-leading it will post to asset. So that's why this valuation part comes into picture, and you are valuating your same asset, same transaction in a different way. For one GAAP it is an expense, for another GAAP it is an asset. However, the transaction is same. That's why this logic comes into picture for technical clearing account. Okay. We go here, we define this, we create a GL account. The property should be a technical clearing account, it should be a balance sheet account, it should be a reconciliation, asset reconciliation account. So if I show you this, and it should not be used in any of the account determination table. You have to ensure this in asset accounting. Technical clearing, balance sheet account, and should be a reconciliation asset account. Another option, define technical clearing account for required field controls. So here you can determine by asset class. You can differentiate technical clearing account by class if you want. For an integrated asset acquisition system, divide the transaction into operational and valuation. Okay, here it is. So you can tell system that okay, for this account determination I need this technical clearing account, but for another I need this technical clearing account, in case it is a business requirement. Normally it does not impact whether for all account determination for all asset class you use the same technical clearing account or you use the different technical clearing account. It hardly matters, because at the end the balance gets out zero automatically, and this is not the part of your any reports, and unnecessary you are just maintaining multiple accounts if you are saying system that okay, maintain it by asset class. But you can do that. SAP option is available. Scana, then we have ZZ, this one 172001. Okay, so now only for this determination it will hit JIT GL, and I can tell another system that for another determination hit another GL. It can do that. Okay, okay. Allow down payment transaction types in asset class. So what is down payment? Let's understand the concept first. So when you purchase a big ticket item, normally you have to pay the down payment. Vendor will say, hey, give me some advance money. I cannot give you the item of 1 million on 30-day payment terms. You have to give me some advance. So what AP team do is AP team creates a down payment request. It's an, you can say, notional entry, and then it makes a payment against that. But how does it impact an asset is when that accounting happens. For example, there is a purchase order of $1,000 and $100 is an advance. Okay, and then what you do is system will post $100 advance on an asset because it is an asset purchase. Now when the vendor will deliver goods and give you final invoice, vendor will give you invoice for $1,000, right? And it will say, hey, adjust full invoice, because initially it was a down payment request. Vendor will say, hey, take the invoice of $1,000, pay me 900 and balance adjust against my down payment. So in that case, when you book the $1,000 invoice and 100 is already booked, your impact is 1100, but actual impact should be 1000. So in that case, what you do is you clear the down payment. When you do the down payment clearing, then that $100 is cleared out and the actual balance on the asset comes as $1,000. Now here what we do is we allow the system to have down payment on certain asset class. We should not allow the down payment normally on the normal assets. It should be normally on AUCs. Okay, so if you see here, down payment, specify asset class. So standard SAP is also given the option, just have it on AUCs, don't have it on normal asset, because normal assets are purchased without, if you're purchasing a laptop, if you're purchasing a furniture or machinery, it should not be a, you are not going to pay advance. For $1,000 laptop, you are not going to pay advance to the vendor. But if it is a $1 million item, then it is an advance. And for $1 million item, normally it goes under an asset under construction or projects. It does not go under direct asset. So if this is allowed, system will only allow down payment posting only on this asset class. If you create an asset, any other asset class, and you put it in the down payment request, system will reject it. System will say not allowed. Sorry. So in AP, it impacts. If somebody by mistake put the wrong asset number in down payment, system will block them. It will say, hey, there is a control. You can only put the asset created under asset class 4000 or 4001 or whatever the AUC class is. You cannot do under any other class. So that's the functionality we have here. Okay. Previous subsequent capitalization of discounts. For an asset acquisition posting integrated with a AP, you can specify by your choice of document type. If the invoice should be posted gross or net, when you use a document type for net posting, system automatically determine the cash discount. So here, you know, every country has a different law. They say, some countries say, hey, we want to capitalize tax. Some say we don't want. And same thing is for discount. If the $1,000 invoice with $100 discount, how much you want to capitalize? 900 or 1000? So that's what the setting here is. If you check this indicator, then cash discount cannot be capitalized subsequently on fixed assets. For an asset acquisition posting, okay, so same definition. Simple as if this, I check this button indicator, then cash discount cannot be capitalized. I cannot capitalize the discount. So if the $1,000 invoice, I can only capitalize 900 because it will say, hey, you cannot capitalize 100, it's a discount. But if I uncheck this, then it will allow me to capitalize $1,000. Define validation. In this step, you define validation condition for asset related posting and allocate these rules to corresponding transaction type. Example, it is possible to specify, for example, the certain transaction can only be posted to the asset class stored in the validation rule. Another possible use is classes specific maximum amount check for acquisition posting. So if you, during acquisition, if you want to put any validation in the condition that, okay, this should be the maximum value for the purchase. If this is more than this, then let me know. Then there is a check. Or for these transaction types, for these asset class, only this transaction type is allowed. I don't want to allow anything else. So you can write all those validation rules here in the system. During purchase, it's all about acquisition. So if you see the node, it's all about acquisition. What we are talking, it's everything is acquisition. So we are done with acquisition. Next topic we have to move is retirement.